Hey everyone, welcome back to another episode in DIY Investing Education Series. And today we're going to talk about a very, very important topic to assess or try to determine if an ETF is right for you: total returns, also known as performance. So what are total returns? How do you find them? Well, the easiest way, in my opinion, the best way, in my opinion, is to actually go on the official fund manager's website of the ETF that you're trying to assess or look at. Right, so let's go through an example because it's always the easiest thing to do. So we're going to look at the Global X S&P 500 Index Corporate Class ETF, which is a variant of an S&P 500 Index style ETF. Stock symbol is HXS. So typically you'll always see a section called Performance. That is where you will find the total returns of the ETFs in question. So you'll typically see annualized performance using a percentage here. That is the most important one, in my opinion. You might also see calendar performance, which is basically going to give you the performance of the ETF or the total return of the ETF per year, right? So some years, for example, 2022 wasn't that great, so you might see a negative. Then the next year is much better, et cetera, et cetera, et cetera. So this is by calendar year, but this is really the average. This is the average per year. So for example, in the last 10 years, as of this date right here, this ETF has given you a total return, an average total return of 13.83% annualized. So that is your average total return per year in the last 10 years. This is in the last 5 years, in the last 3 years, and the last 1 year, etc., even shorter than that, right? So the more an ETF has been out there, the more data we have, of course. This is why I'm showing you this one, which has a lot of data. So, and you can see here, it's actually comparing this ETF, which is a variant to the S&P, to an S&P 500 index. They're actually comparing it to the S&P 500 index, the total return. And you see it very closely mirrors the performance, right? So they're just showing you that. So there's a couple of very important points to understand when it comes to total returns or the performance. First of all, the performance includes share price and yield, if any, right? So if a ETF gives you a distribution, whether it's quarterly or monthly, looking at the total return will include that. It's basically simulating as if you're reinvesting that distribution every single month, right? So a perfect example would be something like an ETF that gives you high yield, for example, like USCL. We're going to stick with the S&P 500 theme here. This is the Global X Enhanced S&P 500 Covered Call ETF, USCL. So this one has a pretty substantial annualized distribution. It gives, every month it gives distribution. Typically, you see the amounts here. So if we look at the total return, the performance, in the last year, for example, it's 16.30. That will include these distributions as if you're reinvesting them, right? So why do I mention this? Well, if we look at just keep this in mind here, 1630, that's the total return in the last year as of this date. If we look at just the S&P 500 Index ETF, USSX, if we look at the performance, it's 16.39. It's slightly higher. They're very, very, very similar in terms of performance. But this one has approximately, as of this date, 1.18% yield. This one has 12.99% yield. So the first lesson to remember is that yield is not return, right? A lot of investors, especially newer investors that really like the high yield covered call ETFs, will look at the current annualized distribution rate based on this price, based on this date rather, and think, well, if I invest in this, I'm going to make a return of 12.99% a year. That is actually false. You will make your yield is 12.99%, but that is not the performance or the total return. The total return includes stock price, appreciation or depreciation within the period of time, plus the distributions, if any, and it's net of management fees. So, for example, let's look at USSX in the last year. as of I'm filming this August 14th. You see that the stock price is up 16.92%, but USSL, the one with the higher yield, is up 5.81%. So this is why it's very important to understand the difference between stock price return and total return. Very, very important lesson here. Because if you're only looking at the stock prices, you might think, well, USSX is a much, much better investment. It has more than double the return of USCL. That would be false. We see that USSX does have a little bit higher return than USCL, but only a tiny bit, 16.39 versus 16.30. And that is because, everyone, the yield or the distributions being given out to investors is not shown in the stock chart. This is only the stock price return. You got to look at the total return. Another important thing that a lot of investors do, and you have to remember, especially if you're a newer investor, all they do right away while they're evaluating an ETF is they look at the MER and the management fees, right? We covered the management fees, MERs, in a previous episode. Make sure to check it out in case you haven't seen it. But for example, USSX, the management expense ratio is 0.09%, but for USCL, it's 2.18%. So it's much, much, much higher, right? So a lot of people are, would think, well, this is too high. I'm going to go with the other one instead. It's much, much higher. But you have to remember that the performance or the total returns is net of management fees as well, right? So 16.30 versus 16.39. Very similar performance, but USCL has a much, much higher MER, has much higher management fees, and that's because it takes more work to run this ETF. There's leverage costs as well. Again, I don't want to get into it because I already discussed it. So this is why total return, the concept of total return, everyone, is very, very important to understand. It is the number one metric to evaluate the growth of your investment, the performance of your investment. Just looking at the stock charts will not give you that information. Just looking at the management fees as well is not going to give you an accurate representation as well on how an ETF is performing. The performance and total return is, because that includes stock price, distributions as well, as if you're reinvesting them. So it's counting the distributions. USCL is a perfect example. You're not going to see that those distributions in the stock chart. And it's net of all fees as well. Performance, total returns are net of all management fees, right? So if an ETF is giving you a distribution, whether it's 13% or 1%, you'll never see an accurate representation of its performance only by looking at the stock chart. If a stock, for example, like Tesla, has no dividend, right? The single stock, Tesla has no dividend, there's no fees if you buy it, then you can look at the stock chart. That's going to give you an accurate representation of the total return, right? 1 year up 65.70% example, as of the time I'm filming this, August 14th. That's okay. But if you're dealing with ETFs, everyone, that give you a distribution, that have fees, it's very, very important that when you're judging it, when you're assessing it, when you're trying to figure out if it fits in your portfolio, you have to look at the total return, not the stock price return, which is just looking at stock charts. You can look at the management fees, of course, but remember that total returns are net of management fees. This is always going to be the top indicator to know, okay, in the last year, what is the average total return of my investment? The last 3 years, what is the average per year? 5 years average per year, 10-year average per year, etc., etc. So hopefully you learned what total returns are. It's very, very important you understand that when you're judging an ETF, everyone. Give me a thumbs up. I would really appreciate it. In the next couple of episodes, we're going to talk a little bit about covered calls and what they are.